Hello, welcome to the European Open Briefing for Wednesday, November the 22nd. I'm Rafi Barjan, currency analyst at XM.com, and we're going to be having a look at the latest developments in the currency markets today. The US dollar is rather subdued this morning, despite the fact that we are seeing a strong improvement in risk appetite. Global stocks are at or approaching record levels again, and the yen is firmer despite this risk-on mood. The main reason for dollar-yen weakness is dovish remarks by Fed Chair Janet Yellen and a flattening yield curve in the United States. The euro is moving away from its recent lows this morning. It's up against the US dollar, and the pound isn't doing too badly either ahead of the UK budget later today, and on signs that the UK and the EU are nearing a breakthrough in the Brexit negotiations. DOZ has steadied somewhat following some not so dovish remarks by the RBA Governor Philip Lowe, and we are seeing a sharp rise in oil prices this morning following that oil pipeline between Canada and the US that has put upward pressure on WTI crude prices. But let's start first with dollar. We can see both the dollar yen and dollar index have been heading downwards following those highs on Monday. Dollar yen is once again testing the 112 level. Dollar index has slipped back below the 94 level. US stocks did close at another record high yesterday, but the flattening yield curve is weighing on the greenback. The yield on 2 and 10-year Treasury notes has narrowed to its smallest in a decade. One of the reasons why long-term yields haven't been rising as much as short-term yields is because of strong demand for long-term Treasury notes and expectations that should the Fed go ahead with raising rates over the coming year, the Fed will then be successful in taming inflation, and therefore rates will not need to go up much in the much longer future. And also we had dovish remarks by Fed Chair Janet Yellen, and although she did say that the Fed is reasonably close to achieving its goals of full employment and 2% inflation, she added that the Fed policymakers are becoming increasingly uncertain about whether the current soft patch in inflation is transitory. So all of that has somewhat dampened sentiment for the US dollar, but it is going to be a very busy day in terms of US data. We've got durable goods orders coming up, weekly jobless claims, and the University of Michigan Final Consumer Confidence Index, as well as the FOMC minutes of the October-November policy meeting. So all of that could yet shift the sentiment for the dollar during the course of the day. Let's move on to the yen now. We can see the yen is pretty much firmer against all major currencies. We have seen, we just talked about those factors weighing on dollar yen. We're also seeing recent weakness in euro yen as well, following what's happening in Germany with the failure of the coalition talks between Merkel's party and other parties there. So the euro yen did fall to 2 months low. And this comes despite the fact that risk appetite appears to have recovered strongly, at least midweek today. But another factor weighing, or rather supporting the yen at the moment is speculation that the Bank of Japan may be getting ready to scale back its asset purchases. There are increasing signs by Bank of Japan policymakers who recently have become more vocal about the risks from prolonged easing. This has raised market talk that the Bank of Japan could soon be raising its yield curve target on the 10-year JGBs. So that could be another factor that's lifting the yen at the moment. But let's move on now to European currencies. We can see the euro has managed to crawl up ahead of the European Open this morning. It's currently trading at 1.1767. We do have political uncertainty in Germany, and that could last for several months. Yesterday, the German president urged parties there to resume coalition talks, although Merkel has hinted that she would rather face fresh elections rather than be running a minority government. But for now, it does appear that the parties will be forced to try again to reach some sort of an agreement for a coalition government. We do have the ECB policy meeting minutes for the October meeting coming up tomorrow. That could be significant for the euro, given the fact that the October decisions were not unanimous. Also, the pound is also slightly up this morning against the dollar. It has managed to hold up above the 1.32 level for much of this week. There is increasing optimism that the UK and the EU will be able to resolve their differences over the divorce terms, and so the talks will be able to move on to the trade and transition deal discussions at the EU summit next month. There were reports in the Financial Times that the UK and EU are targeting on reaching a deal within 3 weeks. This comes after the UK government has reportedly raised its Brexit bill offer to the EU. Also today, UK Finance Minister Philip Hammond will be unveiling his budget, and if it, as expected, includes some easing of the austerity and some help to businesses and the housing market, it could provide a short-term boost for sterling. Moving on to the Australian and New Zealand dollars, we can see that the Australian dollar has managed to rebound somewhat from those 5-month lows it touched yesterday. It came under pressure yesterday after the RBA meeting minutes created a very bleak picture for underlying inflation in Australia, which pushed back expectations of a rate hike well into 2019, with some analysts saying even a 2019 rate hike is out of the picture now. But this was soon followed by a speech by RBA Governor Philip Lowe, where he said that although he did say there isn't a strong case in the near term for changing monetary policy, it is likely that the next move will be up, and the overall tone of his speech wasn't quite as dovish in comparison to the RBA minutes. So that did boost the Aussie a little bit. It has rebounded to around 0.7570 at the moment. Though we are seeing some renewed downside pressure after a 9th Australian lawmaker was forced to resign over the dual citizenship scandal, which is hurting the ruling government there. And regarding the Kiwi has so far managed to stay away from the more than 1 year low of 0.6779 it hit last week. Yesterday we saw dairy prices falling in the bi-weekly auction. We also saw a rise in dairy output in New Zealand, so all of that would normally have been a negative for the Kiwi, but given the recent heavy losses, it's quite likely that the Kiwi is at the moment being supported by short covering by traders, given the recent losses were overstretched. The Kiwi at the moment is up 0.15% against the greenback at around 0.6829. And yesterday's dairy auction did fall for the fourth straight auction and hitting an 8-month low. But as I said, that's so far hasn't managed to have created too much of a shock to the Kiwi. Let's move on to oil prices now, because that oil disruption in Canada, one of the pipelines between Canada and the US, seems to be dragging on. It did impact the crude inventories last week, which we saw a bigger than expected drop in US crude stocks, according to yesterday's API figures. The official EIA numbers are due later today, but it is having a significant impact on WTI prices. We can see they hit a fresh 2-year high earlier this morning of $57.98 a barrel. Brent crude hasn't been as affected. It already rose to 1-week high of $63.39 a barrel, and this is also boosting the Canadian dollar a little bit, although the loonie is at the moment being weighed still by the ongoing squabbles between the US, Mexico, and Canada as they renegotiate NAFTA. The fifth round of NAFTA talks ended without much progress, and all of this has kept the loonie within a range in the past 3 weeks. At the moment, though, the loonie is a little bit firmer, around 1.2750 against the greenback. And finally, looking at today's economic calendar, we can see the main data will be out of the US. We've got durable goods coming up, the University of Michigan Final Sentiment Index, the weekly jobless claims. Later late in the US session, early Asian session, we're going to have New Zealand retail sales for the third quarter coming up, and of course the Fed minutes at 19 hours GMT. That's it from me. Thank you very much for watching, and have a great day.